Mortgage rates should have gone down by now, especially with all the news that we have going on in the economy. They should have gone down, but they haven't. And here's why. Let's talk about why mortgage rates are not going down anytime soon and why I think we're in for a rough year ahead for the economy. But first, my name is Tiffany. I'm a mortgage loan officer here in Las Vegas, Nevada, and I'm also a big nerd on all things the economy, government, finance, etc. So if you like anything like the economy, finance, personal finance, anything along those lines, hit that subscribe button, give me a big thumbs up on this video so I can keep bringing you more content like this, and tune in. Mortgage rates should have gone down this week, technically. With all the information that we have, they technically should have gone down. What do I mean by that? First of all, the jobs report came out this week and showed that there is an increase in unemployment, which usually you would think is actually a bad thing, like, oh, there's less people employed. However, what this is doing is it's showing that the economy is showing signs of weakness. So the big ordeal that the Fed has been having recently is, how do we get inflation down? Not necessarily cause a recession, but how do we get inflation down from the record sky highs that we saw back in like 2020? Because if you didn't know, things were increasing by like 10-20%, which if that happens year after year, it would be unsustainable and be really unhealthy for the economy. So the Fed had a really tough job of figuring out, how do we bring down inflation to a healthy normal rate, which our normal healthy rate is about 2 to 3%, anywhere between 2 to 4%. That's a pretty healthy range for inflation to be. And we're getting there. We're definitely better than we used to be, but it's still a really tall order considering there was a lot of inflated cash around. There was a lot of more people who had spending opportunities, and honestly, credit card debt's gotten to an all-time high. So for the most part, it's been tough to say that the economy is going down because on paper, we haven't really technically been going down. They had a really tall order to basically bring down the economy, not to cause a recession, but that might be a byproduct of their policies, but to make sure that inflation stays at a healthy normal rate that we're happy and used to. So they had a really tall order to help make sure that inflation doesn't keep going out the wazoo. And there's a few different factors that contribute to inflation. One is cost of goods, so how expensive is everything getting year after year? Another thing is unemployment. How many people are working versus how many people are not working? And again, we're looking for a very healthy number here. Somewhere in the neighborhood of about 5% is healthy for unemployment. And we were seeing really low unemployment numbers, like 2-3%. So it looked like on paper, there was more people who were working and things were getting more and more expensive. So it was a very unhealthy relationship that the Fed had to basically rein in if they wanted to accomplish their goal of getting back to healthy inflation. We are getting on track. We're starting to see unemployment numbers go up. It's like counterintuitive, but we're starting to see unemployment numbers go up, which is a good indication that the economy is starting to reel itself in. And we just saw this week. So by all intents and purposes, we should have seen, mortgage rates go down. Also, too, we're starting to see cost of goods come back down. I don't know if you see it, but I see it where I go to Target and it's like new lower price, or like, now it's this price instead of it being $10 before. So you're starting to see cost of goods come back down slowly but surely. And in certain sectors, you are seeing an increase, like housing, we're still seeing increase in prices of goods sold. So that is still something that the Fed is working on, but that may not be something that's able to be reined in, truthfully. But for all intents and purposes, the cost of goods going down, unemployment's going up, we look like we're getting back to normal. So that should have been a nice sign for this week that mortgage rates should have come down. However, they didn't. And it's because a lot of people are on the fence about these tariffs that Donald Trump is about to introduce. So if you don't know, tariffs, they are basically a cost of good at the border when someone tries to bring goods from one country to the next, and that importer is going to get charged a tax for bringing those goods into the country. So right now, the countries that are anticipated to have tariffs are Canada, Mexico, and China. Canada and Mexico have actually reached agreements with Donald Trump to delay their tariff season, but China is starting to see a 10% increase in cost of goods that are being imported into the US. So while Canada and Mexico have halted their tariffs for now, it's anticipated to only be for about a couple months that they see this relief. And maybe there's going to get a deal worked out between the two of them, or maybe there's not. But if there is not a deal worked out between Canada and the US and Mexico and the US, then you're going to see a 25% tariff on all goods brought into the US from either of those countries. Now, the reason this is significant, especially for real estate, is that we get a lot of our lumber from Canada. So I don't know if you know this, we don't produce a ton of our own lumber here in the US. We get most of our lumber from Canada and China, which are two countries that we are looking to import goods from. And lumber is a huge house building element, so you need lumber in order to build a house. So this is what's keeping investors from fully signing off that, hey, we're moving in the right direction, because now cost of goods on houses sold might increase. Like I mentioned earlier, housing is one of the sectors that have not seen decreases yet. We are still seeing appreciation for the most part for homes across the country, as far as how much does a house cost now versus how much did it cost 5 years from now, last year, etc. A lot of investors are scared that if these tariffs come to pass within the next few months, that it is going to be significantly more expensive to buy a home. And that's not just, because the area's popping and because we're suddenly more, wealthy than we were before. It's genuinely because the cost of good is going to increase, causing any homes built with lumber before these tariffs to also increase in value. I think what you're seeing is a lot of investors pretty much just sitting on the sidelines. They're going to let the next few months play out and see, do we reach an agreement on tariffs, or is this now suddenly the black sheep that we have to deal with when it comes to bringing in anything that needs lumber? Or even honestly, Mexico brings a lot of labor when it comes to building houses. So if we're suddenly pissing off the Mexicans and we're suddenly pissing off the Canadians, then are we going to be benefiting from that at all? And I think that that's something you're honestly just gonna have to wait and see and play out. But I would not be surprised if we see, especially because the next few months we're heading into the spring market, which is when real estate is already pretty pricey as is. That's usually top of the market, is that spring summer time. So the timing is very interesting in that if this should come to pass in the next few months, we're heading into the busiest season as is in the real estate industry. So I'm very curious to see if this ends up panning out. I'm curious to see if we do anything with Canada and Mexico in the meantime to lower their tariffs from 25% maybe to 10%, similar to what we're seeing with China, or if they decide to impose their own tariffs on us and it's 25% for us and then another 25% for them. So now cost of goods are up 50%. I don't know where this is going to go, but I'm very interested, and I think that's why you're seeing a lot of investors just hold off right now as far as making investing decisions, because they're not sure themselves where this is going to go. I hope you guys enjoyed this video. Please make sure to like and subscribe if you did. And if you have any other topics that you would like for me to cover, leave them in the comments below. Bye.